It is Jobs Week in America, and joining us right now with a look at the trading week ahead is Stephanie Link. She's the chief investment strategist and portfolio manager at Hightower Advisors, also a CNBC contributor. And Stephanie, here we go. The start of a new week. We've got mostly decent signs for the economy, but there are a few signs of concern, particularly if you look at Chicago PMI. How are you feeling about things overall?
Yeah, I mean, it's a new week. It's a new month. I think the economic data last week, Becky, was definitely on the mixed side. But I do think we are still pointing towards kind of soft landing and also above trend growth. Something like 2.9% we've grown in the last 4 quarters. I think it can probably grow 2.5% or so if you kind of look at what the consumer is doing and you look at what kind of pockets in manufacturing are driving the better than expected growth. So when I look at the consumer, the most important thing I'm looking at is initial claims and jobs, anything tied to that. So Friday will be a very big deal. But I do look at the spending patterns and personal income of 4.5%. It's still pretty decent. And then, as I mentioned, in manufacturing, there are pockets that are doing well, especially tied to aviation, especially tied to onshoring and grid and power and that sort of thing. So I think kind of 2.5%, maybe even 3% this quarter is enough to drive earnings higher and keep margins elevated.
We've been talking a lot about NVIDIA this morning, an amazing month it had. In fact, the chart you look at today, it's up another 3%. And since May 1st, that chart is up by 30%. You're looking at the year to date up by more than 125%. Obviously, AI is a big driver, but what do you think more broadly, not just NVIDIA, but the rest of the AI space?
I mean, it's massive, right? And the semiconductor companies, they're able to monetize it. The problem with software and AI is they're still in product development. They'll have their day for sure, and that's an area where you really want to watch out for to look for some bargains. But in the semiconductor space, I mean, the momentum is just huge, Becky, and it really is all about these new products that they're announcing. I mean, I thought NVIDIA's did a very good job at the conference last night, recapping GTC in March and talking about expanding in the enterprise and enterprise verticals and inferencing and all of that. I thought actually AMD had an interesting take on the PC cycle, which is also just beginning. They have a number of new products for PCs with AI that's 5 times the performance. And it's much better than Qualcomm and Intel, according to them, of course. But we're starting to hear from Dell. We're starting to hear from HPQ, now AMD, about the PC cycle. We haven't had a PC cycle upgrade in quite some time. So that's an area where I think is also an area where you can see pretty good bargains.
Well, that's what I was going to say. I mean, obviously, the semiconductors are the ones who are actually making money on this, but they've also got the earnings appreciation or the price appreciation that reflects that. Yeah. We had a couple of venture capitalists in here last week, Mitchell Green and Alan Patrikoff, who both said that the price ranges, especially when you're looking at software companies and things, are kind of outrageous given that they haven't caught up yet. Do you see bargains in any of those places, or is it simply you got to play it to the second or third derivative before you can really find things that make sense to you right now?
I think one of the areas that has been very lumpy is in cybersecurity. And I actually think that cybersecurity is going to be just as big as AI. And yet those stocks some of them have had nice runs. We saw Zscaler last week. CrowdStrike has been great. But on the flip side, you've had Palo Alto and Fortinet not do so well. So I think you want to look at which ones haven't done well, because I think the total addressable market in cybersecurity is something like $2 trillion plus between now and 2030. And I think what you're going to see in cybersecurity is massive consolidation. Because if you talk to any CTO out there, chief technology officers, they will tell you that they're spending on 2 things, AI and cybersecurity, because they're afraid of losing their jobs. So they're focused on cybersecurity. And AI, obviously, they're spending because they're trying to figure out this new technology and what it means for their businesses. And so I think what you're going to see within, again, in cybersecurity, though, is there's so many companies out there, and a lot of them don't talk to each other, which is why it hasn't really worked. And so I think you're going to continue to see companies get big, the big companies get bigger and bigger over time. And so I think you want to own like the top 5 names. And so that's where I see the opportunity.
We did see a pullback, though, in some of the technology names last week. I mean, what does this tell you? You look outside technology for other places that you want to be?
Yeah, I mean, I think last week was sort of interesting. Yeah, we did see some weakness in the technology sector. Yeah. Oh, yeah. Well, of course. And Dell, but actually the other sectors took up the slack. Energy did well, industrials did well, materials did fairly well, mix on consumer, and so that to me is healthy. If one sector goes down, if you will, that it's picked up from other sectors. And I think the reason you're seeing that, Becky, is because earnings have been pretty good across many different sectors, many different companies. It's not just been all about tech, which is what it was last year.
Right, right. Stephanie, I'm really intrigued by this new idea that you say you're watching. Nike, you haven't jumped in, but what do you see there that is kind of piquing your interest?
Yeah, it was all about Foot Locker last week. And the fact that the stock actually has lagged substantially over the last year and a half. So Foot Locker reported a very good number. And you know, one of their biggest partners, their biggest partner is Nike. And the CEO was on your show. And she basically said that they have great new innovation that she was excited about. I also did some homework on their global market share. That's actually remained pretty stable. My interpretation before I did the homework was that they were losing market share to the Hokas and the Ons of the world. They might on the margin, but the global market share in footwear has actually been pretty good. And they have in the second half of 2024 a whole new product innovation cycle story that's just beginning. So maybe I'm a little early here. That's why I haven't bought it just yet. But I do think once they start that spigot of new products, it could be really very exciting. So that one is on my radar.